What's up, guys? Welcome back to the channel where I teach you everything you need to know about accounting, audit, personal finance, and CPA lifestyle, and everything in between. If that sounds awesome to you, make sure to hit that subscribe button below. And welcome to the accounting channel. All right, guys. So today's actually, I don't know if I hesitated to make this video because I don't want to make it seem like I'm trying to sell you on fear or I know everyone's talking about this recession, but me personally, I do feel like we are in a bit of a downturn, obviously, if you guys haven't been aware. And I do feel like in a few days in July, they are going to announce that we are officially, by definition, in a recession, which is 2 consecutive quarters of declining GDP growth. In Q1, we already had declining GDP, and I think in Q2, we're going to have the same thing, which officially means we are in a recession. Okay. I'm going to say this. Just because we're in a recession doesn't mean you need to panic. It doesn't mean you need to be all scared. Especially, trust me, if you are watching this channel, if you're watching this video, chances are that you are not in the population that I hope that you need to be panicking or you need to be worried. And today I want to go over kind of 5 key critical things that you need to be doing now in order to prepare for, I think, what's going to come the next 6, 12, 18 months. Are going to be a little bit tough. I do believe that. And again, it's not to be scared or fearful of what's coming, just to be prepared and ready for anything that might come. And again, those who fail to prepare to fail. So hopefully over the 5 key things that I'm going to go over today are going to help you prepare yourself for any situation that might come your way. So the first thing that you're going to want to do, you're going to want to have 6 months of living expenses of cash on hand ready to go. So what this means is what I mean by this is what you need to do is you need to figure out what your living expenses are, what is fixed and you cannot get rid of, such as your car payments, hopefully you don't have any, your mortgage or rent, utilities, cell phone bill, certain expenses that you just cannot decrease or get rid of. You need to understand how much those are, because that then, let's say, for example, your total living expenses for the month are $2,000. Again, I'm just giving you an example, right? It might be a lot more, it might be a lot less. Everyone's situation is different. So let's say your living expenses are $2,000 a month. So then you would multiply 2 times 6. So you need $12,000 essentially to be able to live, to be able to pay your bills on time, to be able to. That's all you need. You need $12,000 if your expenses are $2,000 a month for 6 months. You need $12,000 of liquid cash on hand in your bank in case you lose your job, in case things come up. Because I'm telling you guys, emergencies come up all the time. You're going to need cash for whatever the case may be. Things come up. So knowing that you have at least 6 months of liquid cash on hand is going to make you a lot more. Make you go to bed at night with a lot more peace of mind. I mean, thankfully I put myself in a position now where I have, quite a bit of cash on hand for certain things other than my living expenses. And I can tell you guys the intangible that comes with the freedom and the peace of mind that I have every night, knowing that, if something went wrong with my job or, I have a big expense that came up, I can pay it no problem. For example, I have a duplex, so my other tenant, the water heater broke, so I had to replace it. That was like $1,200 with the water heater and the work and the labor, and first someone had to come do it. And, obviously I put it on my credit card to get the points, but that being said, I was able to pay my credit card off, and you don't have to, continue to finance any purchases because you're able to pay cash with it. Obviously you put it on your credit card, then you pay your credit card in full the following month. But that being said, having that cash on hand is going to give you the peace of mind that you need to be able to make moves or have a certain amount of tranquility in you going into the next 6, 12 months that, you don't need to be worried about obviously potentially losing a job sucks, but you have the peace of mind knowing that you have enough cash on hand to get you through any storm. Second thing you need to do, you need to pay off any credit card balances you have. I'm sure as you're all aware, the Fed has been meeting, every month, every 2 months or so often. And at every Fed meeting, I think, in my opinion, from here till the end of the year, they're going to continue to increase interest rates to get a handle on inflation. And again, is this something that you need to be scared of? No, not at all. It's just something that you need to be aware of and prepared. And what happens with a lot of these credit cards is that it's essentially a revolver. It's a revolving loan. So these credit cards also have their interest rates are also not fixed. They're variable. So with interest rates continuing to go up, just like I'm sure you're getting more interest on your checking or your savings account now. you're going to be paying a lot more interest for those credit cards that you have. So if you have a 10,000, I'm just going to give you an example. Let's say you have a $10,000 balance on your credit card and your interest rate is now going from, 10% to 15% or 15% to 20 or whatever the case may be as they continue to go up. That's going to hurt a lot of people. So the more you can pay off any variable or consumer debt or any variable interest rate loans you have, pay those off as soon as you can, because what I feel like is going to happen is that the Fed is going to continue to increase interest rates until the end of the year. And some people are going to be hurting pretty bad because, we've lived in a time where interest rates were 2-3% and they were really low and debt was really cheap. But now that the cost of debt almost doubled from interest rates going from 2 to 3% to now 6%. It's terrible. It's pretty bad. I'm talking about a 30-year fixed mortgage. But, that being said, the federal funds rate is what they're continue to increase, which is the rate at which banks let each other borrow money. And the more the Fed increases this, the more it's going to impact you on any variable interest rate loans via your credit cards. So make sure you pay off any credit card balances you have, just to make sure you're not paying any unnecessary interest or penalties on any balances that were probably, let's face it, used to buy stuff you didn't really need. So let's make sure we pay those off as soon as you can. Third thing you need to do, you need to prepare a budget. So you need to sit down whenever you can. After you watch this video, what you're going to do, I recommend everyone use Mint. I love Mint. I've been using it for years, and I feel like it's been a really good scorecard for myself to be able to track where my net worth is, my budget. I track it on there. Everything I do, every expense I have on any credit card I run is run on my Mint account. So I'm able to pull up my Mint account at any time, and I can see exactly what's running through it. And even sometimes I'm able to catch late charges that shouldn't be charged to me. So I think Mint is a great option. But let's say you don't have Mint. Next step you need to do, let's say you don't have any budget at all. What I would do is any credit cards you have, pull up the last statement you have and literally write down exactly what expenses you have each and every month. And what you're going to do is you're going to take out any expenses that you don't need. You're going to start seeing what you can start cutting off so you can be able to save a little more cash to get to that 6 months goal that we talked about in the first step. So what you're going to do, let's say you don't use any budget app, you don't have any budget at all. That's fine. I want you to, but let's say you don't. You're going to export your last bank statement from your last month, and you're going to see what expenses, what are you paying for? What are you spending on? You'll see that sometimes you'll be like, holy shoot, I'm spending a lot on food, or I'm spending a lot on drinks or going out or whatever the case, or clothes. Maybe I need to cut that down and start building a budget and start cutting certain things that are unnecessary for you to spend on, for you to live. Because again, even if this maybe recession doesn't happen and we end up seeing an uptick in the economy and everything kind of goes back to some level of normality, it's not going to hurt you to buy less stuff you don't really need. So my best recommendation is set up a budget for yourself, understand what you're spending on, and see where you can start cutting certain things out to become a little bit more financially disciplined. Okay, the fourth thing is going to become a little bit weird, but even in my own experience, I think you should be updating your resume all the time, because, you should be putting yourself out in the market. Even if you love your job and you want to stay there forever, knowing what the market is paying for a person of your skill set, of your experience, is good to know, because, when raises come up, it's good to be able to have that in the back of your pocket and say, hey, my position with my experience right now is paying X dollars in the market. My raise was only this amount. I'm a lot below the market. Maybe I should be compensated a little more. And sometimes I feel like, even me too. I hate to say this. I don't know if it's because I'm Hispanic or brown or whatever. I don't know if it's just like my culture not to ask for, raises or certain things like that. But, I've never been good at that. But, in the past few years, I've gotten a lot better at updating my resume, understanding what the market is paying for a person like me and my skill set with my experience, just to kind of know and gauge, my salary compared to, my peers in the market, how I'm being compensated. So update your resume. It's always good to keep your skills sharp and to understand, again, even if you love your job and you want to stay there forever, that's great. But understanding what the market is paying for someone of your skill set, of your experience, is good to know. And Unfortunately, the times that we live in, I'm sure as you're all been aware too, a lot of fintech companies, a lot of more of the tech companies have been having a lot of layoffs. And, it can happen where maybe potentially you lose your job. And, it's not something to be completely scared of. It's not something to, live every day, completely in fear that you're going to lose your job, but it can happen. And knowing that, if it were to happen, you have your 6 months of living expenses, you've paid off all your credit cards, you know exactly what you can spend and not spend on. And now you updated your resume and you know exactly, hey, if it does happen, I have a great internal network where I can start handing out my resume and start looking for other opportunities. And with number 4, I'm going to also list out one other thing, is that maybe start looking for other ways to either increase your income or increase your value in the marketplace. Maybe you're missing a certification. Maybe there's a class you can take that's going to make you better at what you do. Maybe there's a book you can start reading that's going to help you be a better negotiator. Maybe there's a book you can start reading that's going to help your interpersonal skills, which is a critical key skill in any endeavor that you choose to do, i.e. How to Win Friends and Influence People. Such a great book to how to learn how to deal and manage and talk with individuals and other people in your business for whatever it is that you do. So the best thing you can do is start preparing these things, because downturns in the market are just part of the cycle and they happen. It's not something, again, to be scared of. It's just something to be prepared and aware for you be able to tackle that challenge for, whatever things happen in the future. And, one thing that I want you guys to remember from this video too is that there will always be excellent jobs for excellent people. And as long as you're increasing your value in the marketplace, you're continuing to achieve that world-class level of, obviously this is an accounting channel, so I'm sure all you guys want to become world-class at accounting and finance and business and your interpersonal skills. As long as you're working towards that, I promise you have nothing to worry about. Even if maybe you are to lose a job or get laid off, there will be something else just waiting for you to come their way. Because, as some companies might do really bad in this market, some companies might do really, really well. And those people are going to need help from skillful people like yourself. So always keep yourself in check and understand that updating your resume doesn't mean you're out there looking for a job, even though you like your job. It's just understanding what your value is in the marketplace and what people are paying for someone of your experience and your level at the moment. And lastly, the last thing you need to do is that don't ever let a crisis go to waste. And I know it sounds really bad because a lot of people are going to be struggling through this market. But, since you've watching this video, and I'm sure since you're part of this community, you're someone that's trying to achieve excellence and chasing that, whatever it is that your North Star. So look for opportunities in this market. I'm continuing to dollar cost average into my investments, no matter how bad the market is, up or down, any given day. Every Monday, I'm investing a certain amount, and I'm going to continue to do that for the next 12, 18 months, because I do feel that there's going to be a lot of opportunities that come up. Things that were, valued, way overvalued 6 months ago, 3 months ago, 10 months ago, are now going to be at a discount because, people are forced to sell to be able to pay for debt because the cost of debt is so expensive. So a lot of assets are going to be going for sale, whether it's the stock market, whether it's real estate. Again, I'm not saying things are going to crash overnight, but I do think over the next 6, 12, 18 months, there's going to be a lot of opportunities that come up. And, what's crazy is that, I read the stat the other day that a lot of millionaires are made during recessions because they're able to capitalize because they've been preparing for a moment where, asset prices go down and they get on discount. And I guarantee you guys, unless you feel like America in itself, obviously I live in America, so I'm giving you guys the stock market in the US, but unless you feel like this is the end of America and it's never going to come back, and I promise you guys, the market's going to come back. Okay, we're not at the end. Relax. Okay, believe me when I tell you the markets will come back, and when they do, if you position yourself in a way to take advantage of the next 6, 12, and 18 months, I promise you 5 years from now, and again, this investment might not pay back for a few years, but I promise you guys, 5 years from now, if you position yourself in a way where you have 6 months of living expenses, you don't have to be paying for credit cards, you increase your value in the marketplace, you're able to make sound investments where you did your research and you're able to capitalize on certain things that are on sale, in 3 to 5 years, I promise you, you're going to be so thankful to yourself for making the decisions that you did now, because in that time period, you're going to be in such a better position that you are not going to believe how much you benefited from this downturn. So again, this video is not for you to be scared or for you to be frightened or about what's going to happen. Downturns in the market are things that are just a natural part of the process. And, for you to be able to put yourself in a position to capitalize on these certain events is going to put you in the best position to be able to 3-5 years from now reap the benefits of this downturn. So hopefully you use these steps to help you capitalize on this downturn that's, that I feel is going to happen. So, all right, guys, that's going to be it for the video today. If you found value in the video, please make sure to hit the like button below. And also, guys, don't forget to add me on any social media platform you use. Until next time, work hard, dress well, peace.